Welcome to the Australian Business Executive Podcast, where we speak with Australia's most influential industry professionals on the business and economic development issues taking place across the country. You can stay up to date with all our content, including our magazines, podcasts and videos by visiting www.theabe.com.au and clicking on subscribe.
Today's guest is David Gandolfo, Director of Finance broking firm Quantum Business Finance. As Australia's best connected and resourced equipment finance broking firm, they guarantee preferential interest rates on the full range of equipment finance facilities for every major bank and specialised leader in the market. David has been in the industry for over 30 years and as a business owner himself understands the financial issues facing companies. In addition to his role as Director of Quantum Business Finance, he also advocates for business as President of the Commercial Asset Finance Brokers Association and Deputy Chair of the Council of Small Business Organisations of Australia. David, thanks for being here with us today.
That's a pleasure, Stuart. How are you going?
I'm well, David. For listeners who aren't familiar with Quantum Business Finance, could you provide an overview of the services you offer?
Okay, so primarily, Quantum Business Finance, as the name says, is a provider of finance to businesses, small to medium-sized businesses, but that can be sole traders as well, and it can be individuals in some circumstances. Most of what we do is plant, machinery, equipment, or asset finance, and that's lease, hire, purchase, chattel mortgage, that type of facility for machinery, equipment, motor vehicles, transport equipment, infrastructure, fit out, that sort of thing. And we also have a division which does commercial property, debtor factoring, invoice discounting, trade finance, and we quite often integrate those other facilities with the plant, machinery and equipment finance that we provide. And we also utilise loans and facilities from fintechs, which are the sort of the new breed of lenders in the market, and we use those facilities to complement what we're doing. So we take a holistic view, and we've got a whole range of products available from a whole range of banks. We've got about 20 different lenders on our panel, including the four majors, the second-tier banks, boutique lenders, specialist lenders, trade financiers, those sorts of people, and we have the full range of products available from each of those. So rather than going to your bank and having your one bank's range of facilities available to you, we have an exponential number of facilities, and of course we can give you advice on those, and we can give you a combination of those from a range of different places.
There must be some common reasons why business owners reach out to you.
Oh, very simple. Look, service, primarily service. I mean, people come to us initially, we win new business on price, but we retain clients on service. And our client retention rate is something like about 97%, and the remaining 3% has a high proportion of people of business succession or business sale or people moving on. So we really don't lose clients because of service. We win them on price, keep them on service, but clients can come to us and, as I say, access a range of different facilities, get advice which is independent, it's impartial. I'm not working for the bank, I'm working for you. Or I'm working for the client, the borrower, and all we concentrate on is the benefit to the customer and making sure that that customer gets an outcome which is cost effective, that's appropriate, correct, and that they are happy and that they will always come back. So we're not interested. There's two types of broking firms. There's transactional firms, which, primarily are online, do tick and flick lending for motor cars and things like that. And there's relational firms, and we're very much a relational firm, line of sight to the customer, getting to know the customer, immersing ourselves in their business and understanding the needs that they have and being able to provide appropriate and prompt solutions to whatever those needs are.
Now, there's some misconceptions in the market about how finance broking works. When customers first contact you, what sort of concerns do you often find yourself having to address?
Well, sometimes we have to deal with the experiences that they've had elsewhere, and and perhaps they may have had an experience with a motor vehicle dealer and regarded them as a finance broker. That in fact is not the relationship that we have with our customers. Sometimes they've had experience with a mortgage broker, and that may or may not have been a good experience, but the sorts of facilities and the type of relationship that they have is different to the one that we have. And quite often they've had experience with their bank, and their bank has said, no, we're cheaper than the broker, or we can do this or that. Many years ago, I used to have to explain to new clients the sorts of facilities that we do. But I mean, by and large, we now, the market is very educated, and certainly the broker penetration of the market is very, very strong. And statistically, brokers account for 66 or 67% of the whole of the asset finance market. And in the SME market, it's up around the high 90% through to the institutional borrowers, which is about 15%. So we have brokers as a profession have a fairly substantial control of that market. And you mentioned in your introduction that I'm the head of the industry body, the Commercial Asset Finance Brokers Association. Now, CAFPA represents the brokers who write all of that business. The asset finance market in Australia has about $100 billion in receivables at any given time. There's $40 billion of new business written every year, and brokers account, as I say, for 66 or 67% of that market, so about two-thirds. And so certainly we have brokers as a whole, not just my own firm, but we have a very strong foothold on that market, and the reason that we have it is because of the service that we provide.
When most people think of financing, they think of their bank. Can you explain why a broker is often necessary and the role it fulfills?
Oh, yeah. Without disrespect to the bank, I mean, you would know in your own experience, and I do as a business owner, how many business bankers I've had over the last 10, 15 years. And the average tenure of those business bankers is about 18 months. And each business banker is there to sell a range of products that are offered by the bank. 20, 30 years ago, your bank manager used to do the credit and approve your loan, and he or she would know you. That's a different story now. They're there to sell you a product. Now, they have a limited knowledge of a wide range of products. In my business, in Quantum Business Finance, we offer a specific range of products, and we don't try to pretend to be in investments. We're not in superannuation. We're not in insurance. We're not trying to flog you home loans or any other product. We are there to provide you with commercial finance for the operation and expansion of your business. And we have a great depth of knowledge of those products. So there's a very big difference between going to your bank and coming to us, quite apart from the fact that we've got the products from 20-odd banks available to you, and your banker has one range of products. Our depth of knowledge is quite extraordinary, and we can join different products from different banks and different providers under one roof, and we can provide all of those as one point of contact. So you don't have to go to anybody beyond us for all of those things to be available to you.
Could you give an example of a client you've helped through these methods?
Oh, certainly. I mean, it can be as simple as, just buying a car, and we provide the finance for the motor vehicle. It could be, we've got a situation at the moment where we've got a fairly substantial materials handling business acquiring another one, and we're providing the finance for the whole of the fleet of forklifts and materials handling equipment. Now, that involves valuations, it involves site inspections, it involves obviously the funding. We got involved with the purchaser and the vendors, lawyers and accountants, so that the contract of sale between the two businesses wouldn't have any conditions which would prevent or impede on the ability to provide finance for the acquisition by the purchaser. So we get quite involved in those sorts of things, and frankly, there's no banker who would get involved in each step of the process, but I personally get involved with each one of those steps, and we are the point of call. It's because we're not their bank that we're actually able to provide all of those things, because we have a greater area of expertise in the market in which we operate. So that's one where we're assisting a business to purchase another business. I've got another one at the moment, and we often do facilities or deals where a piece of equipment may be coming from Europe or from the United States or anywhere overseas. There may be partial payments that are required before that piece of equipment even leaves the factory, then gets put on a ship. There could be transshipment documentation. We oversee all of that. Once the equipment comes to Australia, then we roll the facility under an escrow agreement into a term loan or a chattel mortgage or a lease agreement. The banks simply don't do that. They've got trade finance departments and they've got asset finance departments, but they don't work with each other. We do the whole solution end to end. In fact, I had a client that I spoke to yesterday was offered something by his own bank that was half of that, but wasn't an end-to-end solution. We offer all of that. So it's our own knowledge and expertise which allows us to do that, but obviously our own resources and our own connections. We're very well resourced and very well connected. We know who to go to within each of these institutions, who's the best person for putting these deals together. But we are the central point to it. Then another one simply is perhaps restructuring debt. In the mining boom, we had clients in Western Australia who were paying down debt very aggressively because their cash flow was extremely strong. They were buying long-term assets on short-term financing facilities where, say, you might have a piece of mining equipment with a working life of 10 or 20 years, but they were funding them over 3 years because of the contracts that they had. Then, of course, the contracts dried up, the work dried up, and the mining boom slowed down. They still had cash flow, but not sufficient cash flow to meet those short-term contracts. So we simply were able to refinance them. Now, a lot of those clients, their competitors, would have been in trouble with their banks because their banks weren't willing to do that. But we were in a position to be able to do that, to spread that risk, spread the loans over a longer term, and maintain their stability. So our business isn't just about lending money. It's about partnering with clients and working within their business as if we had a role within their with their CFO to make sure that they've got continuity of funding and appropriate levels of funding. And it's not just about lending them money, it's about enabling them to grow their business and to prosper and create wealth and employ people.
As we mentioned in the introduction, you're well known in Australia's finance sector, including your roles within industry groups. How did you become involved with these positions?
22 years ago, I was invited onto the board of the Australian Asset Finance Association, which was the Victorian body of professional body of equipment finance brokers, and I simply haven't left that role. But if you're in a profession where you've prospered and you've run a good business and it's given you a good lifestyle, I think it's incumbent on you to give something back to it. Now, I became president of the AAFA at a time when we could see that there was going to be some national regulation which could impact upon us, and what that regulation would have been the imposition of consumer-style lending restrictions on the commercial borrowers. And whilst all borrowers should receive protections from unfair contract terms, prescriptive lending would have made it difficult for any business in a growth trajectory to have been able to borrow money. So we could see that was going to be a problem, and I spoke to the head of the New South Wales body and I said, look, we can't go to Canberra state bodies and argue the point about this. We need to form a national body, which we did, and that is CAFPA, the Commercial Asset Finance Brokers Association, which I was the founding president. And in fact, I'm still president. There's been a couple in between, but I've never been off that board. I've always held an executive role there. So that's how that happened. And then CAFPA has engaged heavily with COSBOA, the Council of Small Business Associations of Australia, which is a very well-resourced and connected body in Canberra, probably the most quoted industry body in the media in Canberra. And its Chief Executive, Peter Strong, is extremely well known around Parliament. And we engaged with COSBOA when we thought that they needed a little bit of guidance on some of the things they were saying around financial services. They invited us to join, and I was invited onto their board, and I'm now their deputy chair. So they're two voluntary roles, but I do those very willingly because I'm not just after outcomes for my clients. I'm looking for good outcomes and a good working environment for the profession that I represent.
David, that's all I have for you. Thank you very much for taking the time to join us today.
That's a pleasure, and thank you very much for your time as well.
This has been a production of the Australian Business Executive, a division of Romulus Rising Proprietary Limited. All rights reserved. You can stay up to date with the Australian Business Executive, including our magazines, podcasts and videos, by visiting www.theabe.com.au and clicking on subscribe.